Redefine Properties has a portfolio of retail, commercial and industrial property assets and major stakes in Redefine International and Fountainhead.
Right, so it's hoovered up Fountainhead. It's interesting, these two groups have very similar assets. They've also got similar exposures on a global basis. Redefine International is a pretty big player nowadays in Europe. Mark Wayne at the helm of this. Tremendous mix of assets. The Fountainhead brings them more into retail. That's malls like, N1 City and all that sort of thing. Tremendous. Big as well. In the Aussie 40 recently as well.
Market cap 46 billion rand, trading yield of 8.4%.
Not dissimilar at all to Growthpoint. The very same macro factors playing out here. Their yield is higher though. So they're sitting at, a good 1.5% odd yield pickup from Growthpoint, and that must count in their favor. But they're all sitting with more or less the same problem. Long bond yields are up, and when you look at distributions, the distribution growth looking forward is not great. Of course, the weak rand will help all of the guys with overseas assets. But as we've seen in the last week or so, it's not guaranteed the rand's going to collapse every year. This isn't written in stone. Sometimes it seems as though it is. But once again, I don't think the yield is high enough, even though it is higher than what we've seen in Growthpoint.
Let's get your thoughts, Paul.
It's quite interesting and quite fun to watch these two groups compete with each other, because they really are the two. And remember, they had quite a nice
very
fight.
Public about
the fight over Fountainhead.
Exactly.
But of course, Growthpoint, then went and bought 3 or 4 other things. So it's not like that. Both of them have also got a wonderful relationship with their preferred financiers. So, that 30% debt Wayne talks about, that's a big, close working relationship. So they can literally buy anything or do anything. Combination of new things, so on the one hand, they're developing new head offices in the Sandton area. A lot of the time you'll see that, other people's signs are up, but then when you scratch a little bit, you'll find it's 55% owned by this one, by that one. So enormous leverage, enormous ability to do new things, greenfields as well as brownfields expansions of the existing malls. I think we've got tremendous assets and corporate head office assets in this country.
Can we call it hot or not on Redefine?
Not unfortunately.
And I think I'm going to go similarly against this, because whilst, all of the comments about their expertise and prowess and international attractions have been stated, the overwhelming issue really is the pricing of these assets relative to bonds. So not a good time.